Hello, everyone, and welcome to another Data Jam. I'm your host, Kent Blacksher, VP of Biz Dev here at Segmint, and excited to chat with our panelist today. This should be a very interesting discussion about the landscape in and around M&A and all of those issues that many of you have questions on or are watching as things kind of, are always evolving in the financial industry landscape that we're well versed in. But joining me, first of all, is Rick Hall. Rick is the Managing Director for Banking and Financial Services at BKM Marketing Associates. Rick, a pleasure to have you today.
Good to be with you.
And also joining us from Segmint is our president, the one and only Adam Craig. Adam, thanks for taking time out of your schedule to be with us today.
No problem. Thanks, Kent.
Now, before we kind of jump in, really curious for our audience who has joined us on previous Data Jam sessions. Rick, would like to get a little more framework on your expertise. We're very excited to have you, but for those watching, can you give us a little lay of the land to kind of your day-to-day, your history, and what you're doing in this space?
Sure. I've spent the better part of my 30-year career either working inside of financial institutions or consulting with them. In the role that I'm in right now, BKM Marketing, we do an extensive amount of integrated programs for financial services, primarily banks, community banks. But we have a kind of a unique practice that we've really built out over the last half a dozen years or so, focusing on the merger and acquisition space, primarily working with acquirers in terms of understanding who the customers are that they're acquiring, and building more robust communications programs around that, really focusing on retention and obviously trying to get, once these new customers or clients have been onboarded, that you really give them the best opportunity for growing those relationships. So that's pretty much what I do on a day-to-day basis.
That's fantastic, and why we're so excited to have you. And really, one of the big highlights of our session today is really kind of picking your brain a little bit, and obviously the expertise of Adam, who's got a diverse background as it pertains to this space as well, and the leader of our organization. But Rick, can you kind of, I guess, set the scene, if you will, right now on the landscape of, as in the M&A landscape? Where are you seeing things right now, maybe as it compared to what was recently? And then the follow-up to that, just so you know, I'll kind of be asking you and Adam your thoughts in and around the growth of neobanks and fintechs as that's kind of impacting it. But first, kind of give me the holistic view of what you're seeing right now, if you don't mind.
Well, I think, obviously the elephant in the room is how much COVID impacted, the merger business, particularly, in 2020. Coming through 2021, we rebounded in terms of the number of deals, a little over 200 that were done, and we expect that number again from an analyst perspective. I think we're thinking that those numbers are going to be at or maybe even a little bit above in 2022. The difference that I think that we've seen in the M&A space is the fact that we've seen larger combinations. We haven't seen that for a number of years, and so while we focus primarily on the regional and the community banking space, we've seen a lot of larger combinations. U.S. Bank making an acquisition, PNC making an acquisition, which is relatively unique in what we've seen in the past year. But we expect things to get back to kind of where our pace has been in around in around 4%, 5% consolidation. And we'll start to see smaller combinations as those become realistic. And it's a little bit like a marriage, right? You've got to try to find the right partner.
That's very accurate. Now, I'm actually going to skip ahead. I mentioned, and I'll come back to it. I do want to talk about kind of where you see the neobanks and fintechs, but you brought you kicked off with the pandemic, and one of the areas I'd hope to ask, and I'm also want to get your take on this as well, Adam, as it pertains to what you're seeing and maybe your industry specifically. But you mentioned the pandemic slowing down the M&A space a little bit, and I guess the rates and things like that flowing a little differently now, or the rate of acquisitions and some of the mix-ups. When do you see that kind of getting back to air quote normal? What kind of cadence are you and your team expecting to see things settle? Or is that a pipe dream? Will there ever be any sort of kind of normalcy in when you think of M&As as a whole, let alone this kind of, dare I say, volatile industry, or
Yeah.
one with so much flux?
I mean, I think we're pretty close to being back, right? I mean, I think the number of deals may have been a little bit smaller, but the size of the deals being so much bigger that was kind of the hallmark for the past year. I think the challenge right now, quite frankly, is a little bit in the pricing in terms of are people willing to pay what sellers are looking to get. The old adage is banks are sold, not bought. Is still pretty true. I think that what we ultimately, I think, will see is a lot more of a challenge in trying to find the right partner, like I just mentioned. Trying to figure out what's the right mix without completely, uprooting your culture or your commitment to the community, and figure out where are those synergies and where are those fits. That's where it becomes a little unknown, and certainly that COVID made that a lot more difficult.
Fair enough. Adam, I'm going to point at you now virtually. Lead us into kind of what I was framing up or starting to. What are you seeing from neobanks and fintechs? How are they impacting the M&A space kind of right now, and what are you seeing?
Yeah, that's a great question. Thanks. I think it's really interesting. It used to be that if you were a bank or a credit union and you wanted to know who your competition was, all you had to do was, open up the blinds and look out the window across the street. And I think, that's no longer the case with neobanks, with digital banks, with fintechs becoming banks and fintechs acquiring charters. Virtually anybody now is competition for a bank. I think if you fast forward a couple of years, with the onslaught of open banking initiatives that you're likely to see in embedded finance, I mean, virtually everybody will have the ability to be a financial institution. You can open a checking account at Walgreens right now. And so I think, that's really changed the game in terms of competition, and it's made it harder for especially the banks at the bottom of the market, the smaller community financial institutions and smaller credit unions, because it's no longer clear exactly who the competition is, and trying to outflank a Walgreens or a Walmart or an Apple is virtually impossible.
Yeah, the resources behind that make that a significant challenge. Rick, do you see that similarly? Are you running into that in your infrastructure or your day to day?
Yeah, I mean, I think competition is huge, right? I mean, you're not getting outflanked by, as Adam said, the person across the street, where you've got a CD rate that you can promote in your physical infrastructure, right? I mean, people can bank wherever they want, and I think as we get into the topic of data, when I started my career, there was kind of this gut feeling of executives who knew who their customers were, right? I mean, it was kind of that old school mentality. That doesn't work anymore. And, I think that, organizations that can be more data driven, understanding behaviors, it's not enough just to kind of start lumping these personas into these buckets, right, that everybody likes to talk about, because we're all different. I mean, and what we want out of our financial institution will vary widely. Who we want, and the fact that we may have multiple providers that we pick that are best of breed, whether it's a deposit product or a lending product or a business product versus a consumer product. Those relationships can show up anywhere, right? And so I think that level of competition is making it much more challenging.
I get excited. You saw me probably smiling, and that's my baby, right? When you're talking about using data and understanding behaviors and what's going on with individuals, and really relevancy of engagement, which is huge, obviously. But I want to stick on the data point that you brought up for a second, Rick. Because you mentioned it, right? You talked about the ability to, getting more, what we'll call personalized, being more relevant and understanding individuals better. But what are some ways in the mergers and acquisition space that you think data can be used to model or help select the right targets. What's that like for you in your day to day?
Loaded question, right?
True.
Um,
Guilty as charged.
yeah. No, I think we're still kind of operating in a world, and I'll talk right now kind of primarily on the banking space. Due diligence hasn't really evolved, in my opinion, from a data perspective. We look at the financials, we look at credit quality. Those are all obviously incredibly important, but you don't really know who the customers are. I think when you go through this due diligence, you think that you have a sense in terms of, all right, well, this bank is in this specific market. And we kind of have a sense of whether it's an overlapping market or a contiguous market. But when you really peel the onion a little bit and looking at the data, which we tend to do after the deal is announced, right? So, you're kind of getting into this spot of, okay, well, now we're getting some information that's not really acquired or in-depth diving of, who these customers are. You have a broad sense from a publicly available information perspective in terms of what products and services they offer and those kinds of things. But, when you really start to peel back and figure out, let's just take subscriptions, right? As a perfect example of easy data to uncover, right? Who your customers, I always ask the question, how many customers do you have, and how many customers have Netflix, right? And then most people would just stare at you and say, why would I know that? And so the fact that we're moving into a subscription economy, 100 miles an hour, do those customers behave and do they look like your customers? Because you've built a portfolio of products and services and a delivery mechanism around ideally understanding what your customers want. Now you're bringing in a whole influx of new customers, new employees. Are they even similar or dissimilar? And that's a big assumption for the cost that these institutions are paying to come on board, and then realize now we've got to train them to act like our customers. That's a hard proposition to sell.
You're exactly right, and I know if I didn't lead to Adam right now, he would be jumping in, because I know this is an area near and dear to his heart. Adam, kind of a follow up on this. What are you seeing as it pertains to this? And I know you've actually you've written on some of this topic as well. So your thoughts.
I have, and I agree with Rick. I think organizations are sitting on a gold mine of customer data, of first party data, and they're not using it for strategic advantage. They're not taking advantage of it. They don't know how to mine for it. If they do, they don't know how to use it. So that's where we like to come in and use our tools to help them. But I think this is a huge problem in the M&A space. And so what I'd like to see is financial institutions that are engaged in M&A using data more actively to support their M&A processes.
Completely valid. And you talked, I think, in the marketplace. I think when you wrote an article, you talked footprint segmentation is. Can you expound on that a little bit, Adam?
Yeah, sure.
And explain. And please, I'm sure we'll add a link to this in the notes for those who want to see this. But you wrote. I'd like to hear you explain that a little bit.
Yeah, sure. So there's really, I think, there's two quick wins when looking at how financial institutions can use data from an M&A standpoint. The first is geographic footprint. Some financial institutions are looking to expand inside their own territory. Some are looking to double down and grab more customers in their current serving area, and then some are trying to expand into others. I think some of the PNC acquisition that Rick mentioned was an example. And so looking at consumer spending, looking at banking patterns can help identify the right potential targets for a bank or a credit union that's in acquisition mode to pursue. Knowing where your customers live, where they work, where they shop, that can all be an indicator of where there should be a branch, where there needs to be an ATM location. So that's one way that I think financial institutions can quickly use data in their M&A process. The other is as you mentioned, segmentation. looking at capturing market share by truly understanding some of what Rick described, really understanding, customers at a very, very deep level. So taking a look at the first party transaction data that's coming out of a core banking system, for example, can show how many of a financial institution's customers are making payments or transfers to a competitive bank. And so that right there could reveal a target that might be the best one to acquire. You see a lot of held away assets, you see a lot of money moving out of your financial institution. Maybe that's the right target for you if you're in acquisition mode. Calculating the overlap between branch networks is relatively simple. They're all out there. You plot them on a map. But calculating the overlap between the customer base is more difficult, but infinitely more valuable.
Very cool. Awesome. I have to ask, and I think I know the answer to this as I point it back to you, Rick. Improvement in that area? Do you think this is an area that can be improved?
Well, I definitely think it can be improved, right? I mean, I think there's a timing issue. There's also a resource issue, right? I mean, when you take a step back, most of our clients, they don't have merger conversion teams, right? I mean, they're pulling people from different operational areas in the bank, technology, product development. It's a kind of a pulling a large group of people together to kind of make this thing happen. Plus, they still have their day jobs. So I think one of the reasons that this becomes a challenge is that it's just one more layer on all the work that the banks need to do, right? So I think the opportunity is really in looking at partners, right? Partners that you already have that can step in, because you guys work with data, we work with data. It all comes in different quality formats, right? I mean, there's not the concept of normalizing the data, and all of those things don't necessarily work the way that we'd like for them to work. So I feel like it's more of a resource issue than an interest issue. I think no one's really going to say, no, I don't really want to understand who we're buying better. But how does that get done, and where does it fit in the grand scheme? Because they just want to get the deal closed, and then they want to get them converted, right? And so that conversion is the most encompassing activity, to have them up and running past the conversion weekend. And while that is really, that's there's truth to that, that's not the end, right? And so what we're talking about with our clients is, as we are working with data that they've never even seen before, we're looking at it and we're talking to them about the idea of finding partners to help uncover just some elements, some basic elements. Because even in the product mapping side of things, most clients that we work with are comfortable just kind of doing a one-to-one. And what happens to the person who bizarrely has $2 million in a free checking account? What do you do with them? And so just by saying we're going to put you in our free checking, may or may not be the best customer experience. They just haven't had engagement on that stuff. So there are some pretty simple things, but I think it's about getting partners who can help you along the way without impeding on your conversion process.
Yeah, Rick, I totally agree with you. And you mentioned, resources being an issue. We always talk to financial institutions about trying to maintain teams focused on what they're good at, and what banks and credit unions are good at, if they're doing things well, is understanding their customers, providing the best products and services to meet their needs, helping them grow in their financial lives. Being experts in M&A is not necessarily a core strength of most financial institutions, nor is understanding your data and analytics. And so that's why, what we talk to financial institutions about is, let us do the heavy lifting in the areas where you don't have resources, where you don't have expertise necessarily, where you can't staff a team. And let's get you back to doing what you do best, which is interfacing with a client, either online or interfacing with them, in person at a branch.
I agree completely, and we see these types of discussions frequently on the in the trenches, so to speak, in my day to day. But you guys are clearly hitting it out of the park. I do want to transition a little bit in the interest of time. I want to talk a little bit about, well, maybe where you guys think the future may lie in this space. I know at the onset we hinted and skirted at some of it. I'll look to you, Rick. What are your thoughts on, well, the last 10 years have really changed FIs and how they leverage data, but what about specifically the last 12 months? Just kind of your thoughts on the future here.
So I think it's a bit of a mixed bag. The one thing that really concerns me is post-pandemic from an employment perspective. Banks obviously don't necessarily have the best reputation as a place that everybody wants to work, let alone data scientists or others that really have that passion. So I think that's going to be continue to be a challenge. Where do these resources come from, and how do they develop? Right. When I started in banking, we all did detailed management training, credit training. You really understood the holistic aspect of how a bank actually operates. Those programs don't really exist in that fashion anymore. So people become a lot more siloed in understanding what they do, but not necessarily where other things, how other things happen. So that's one aspect of it. I think M&A as an acquirer of talent, I think is going to be a bigger deal than it has been in the past, just simply because of what I just talked about. I think technology, we keep talking about it in this space about technology. Somebody has a technology. Chase has done a wonderful job in the last 20 years of acquiring technology as a fundamental business strategy to augment what they do and be able to take that to market. In much smaller fashion, I think there are banks and credit unions that can do the same thing, because you don't really have, back to the resource issue, there are only so many initiatives that you can undertake in the course of a year with your resources that are technology driven, right? So if you can acquire the technology through a merger and help fund that, that's another opportunity that I think is going to continue to happen. And then, as Adam said, there's growth for the sake of growth, whether it's geographically or trying to get into new lines of business or avail yourself to other segments. And that's really where I think we'll still continue to see that as a way to do that. But I think talent and technology are probably the two things that I'm most interested to see how those get tackled going forward.
I completely agree that the intersection of both of those are probably of critical importance, and I would probably say data and data intelligence. Adam, from that side of it, which is your bread and butter, where do you see future state for data driving intelligence and in the M&A space?
Yeah, I was like chomping at the bit to get in here. I think that the points that Rick made were spot on. I'd add two more, and I'll try to put a forward-looking lens on them. I think one of the things that I'm particularly interested in seeing is what happens with the regulatory environment. So the current regulatory environment, specifically around consolidation in M&A, is likely to be challenged. And so I think that's going to make it hard for financial institutions to figure out, can I grow, can I acquire, or can I be acquired? But the other thing that concerns me is the fact that what the pandemic showed us, and we see this in our business, we see this working with banks and credit unions, is that the old models are no longer able to be used. There was a playbook for how you conducted M&A pre-pandemic, just as there was a playbook for how you identified where to put a branch, looking at foot traffic. Well, what the last 2+ years has shown us is that those playbooks don't work anymore. Everything changed in an instant, and changed for good. And so as we look forward and we think about how do banks and credit unions use data and how do they apply data to their M&A processes, all of the ways they used to think about it are no longer valid. So what they really need are technologies and consultants and support and help in figuring out how do we take the data that we have now, which doesn't go back 2 or 3 years. How do we look forward? How do we predict the future to some extent? And how can we be successful? Because the need to grow, the need to acquire, that's not going away. But the way in which financial institutions think about that process has to change.
I completely
Go ahead.
agree.
I'm sorry, Rick. Yours.
To kind of add to that, I'm always intrigued by taking a look at where the banks and the credit unions are in terms of their 2-3 year strategic plan, right? And where does M&A fit in that? And most will say, well, we're going to be opportunistic, right? If a deal presents itself, we're going to do, we'll explore it. But those strategic plans are there for a reason, right? And so if data is not part of your strategic plan, if a more in-depth understanding of not only who your customers are, but how they behave and how they use you and where else do they go and all of those other things, then I think what we're talking about today is maybe a bit of a stretch. But if it is in your DNA, in terms of leveraging, and even to the point, Adam, that your comment about using partners and using consultants who really do bring that expertise, that's not a nice to have anymore. I mean, it's these things have to dovetail in order for them to be effective. We get called in every once in a while because the bank's done a merger, communicated a merger on their own, and then lo and behold, they realize that they've got a 60% retention rate. Those are preventable activities. And a lot of that really comes through finding the right partners who have been down there, right? I'm around 50 plus or minus mergers in my career. I think I've seen everything. I haven't, right? Every time I think, well, this is going to be, there is no playbook for M&A. Every merger I've been a part of is very different from one another. They have their similarities in terms of the core transition and all of that stuff, but there's so many different nuances to the types of businesses that you're in, the types of customers, the markets that you service, technology that you have, the technology that customers are going to lose as a result of switching core providers. And so I would just add, that strategic planning part has to encompass not just M&A, but how do you really want to be thinking about the use of data in your institution?
That is a perfect transition to what I was hoping to discuss next, because my goodness, this has already flown. We've been talking for a half an hour about the M&A space, what background, what we're seeing, the changing landscape, and a little bit of talking about what we think may come next, which is great. But one of the areas, if we didn't spend some time today talking about, is the importance of managing relationships, account holders, things like that after a merger or acquisition. And your point, Rick, in and around the data, and you used a term that Adam's heard me use a lot, that it's not a nice to have, it's a gotta have. We say that quite frequently. And I'll open it up to either of you. Talk to me about data in the evolving landscape after an M&A play. Whoever wants to take that.
Yeah, why don't I give Rick a breather here? Also give me a chance to yet again agree with something that he said a couple of minutes ago. The work in mergers and acquisitions is not done when the deal is signed. In fact, the hard work happens after the deal is signed. And whether or not a merger and acquisition transaction is successful depends on a large part on the customers themselves, the customers of the bank. And so let me give you a couple of examples, and I wrote about this in my recent article that I think are very relevant here. So product rationalization is one of them. So, once a deal is closed, really beforehand, it's time to look at products. Rick gave an example before about the customer who's got $200,000 in a no interest checking account. But when you look across financial institutions, you have to take a look at, do you really need 8 checking accounts? Do you need 6 different, CD products? And how is it possible for an acquirer to figure out which ones to keep? So I would tell you that the answer lies in data, and that's because we're a data company and that's what we do. But knowing how many of your soon to be acquired customers are making a payment, a competitive mortgage, let's say, could help determine which of the mortgage products a bank or credit union should keep and which ones should be sunset. Looking at take rates on each of those products, looking at the features and benefits and comparing those. Understanding which business customers are using Square as an example, which for larger financial institutions that are doing their own merchant payment processing, can help them identify which merchant solutions they need to take to their market in order to be competitive. Which ones do they need to drop? I think another example that we see a lot of is customer retention. So does the acquirer have, as they're looking to complete their acquisition, are they going to lose the value of the asset they just acquired because they're going to let customers walk out the door? That's a shame. And Rick mentioned that, and we see that all the time, that the customers become a casualty of the acquisition, and then that destroys the value of the acquisition that was intended in the first place. So if a financial institution can understand the demographic profiles of their customers, are they a home improver? Are they an outdoor enthusiast? What stage of life are they in? Did they just have a child? Are they retiring? Did they just get married? Are they saving for college? Are they in the market for a loan? By knowing that much about your constituency base, it allows you to identify not only the right products, but also the right ways to communicate with each of those target segments to make sure that they're retained and hopefully thrive post acquisition.
One of the interesting things, and you mentioned it, Adam, and it's a fantastic point, is the importance of leveraging data, right? When you talk about customer retention and the rationalization of product, I think is extremely powerful here. Can you talk to us a bit about what you're seeing? I know what I see, but I don't see it on the M&A side like you do. But can you talk about like predictive and cross-sell models, how they are assisting institutions right now that have kind of gone through this?
Yeah, absolutely. It's a great question. As I talked about before, successful outcomes in M&A often require analysis of things like product mix, personalized communications, demographic profiles, etc. Our clients are using predictive models to help in this regard. So our predictive model around attrition, our predictive model around loan delinquency and cross-sell, armed with the data before something happens, they're in a great position to alter the future and ensure better outcomes. And let's face it, wouldn't we all like to be able to see the future and then operate accordingly? So that's how the predictive models are being used by our clients in M&A activities, and with great success.
And Rick, I certainly want to circle back to you because you've offered a lot of great insight on the M&A process. What are your thoughts as it pertains to, well, kind of what Adam was talking about, the what we're seeing on the Segmint side, the leveraging of data, things like product rationalization, customer retention efforts, things like that. What do you see from your firm and your role as it pertains kind of after the sale, if you will?
Yeah, so we really get involved, right as the deal's getting signed, and so once that happens, we start with our team of folks that we work with, typically the acquiring institution, and talk about, so today is the first day of figuring out what you want to do with these customers, because the day to figure that out is not after you've converted them.
Right.
So product rationalization, as Adam was talking, I have the dreaded word grandfathered product in my head. That fortunately we're seeing less and less of. To Adam's point, you don't need 7 checking accounts. And maybe it's easier for you to just bring them on and then create the mirrored products from what they had before as a less disruption. But that's a very challenging long-term decision, because at some point somebody's going to have to unwind that. So I think that is critical, both from a retention perspective, but it's also easier to maintain a relationship when you don't have to think about from a servicing perspective, all these different ins and outs and creative gotchas that product folks can put together in a product to say, well, how do we figure out what's the best product for you? And so I'll take the stage to say I agree wholeheartedly with that, but I think that it gets back to picking the data that's important for you, and understanding that it's not, we're not talking about data lakes and all sorts of other constructs, right? We're talking about some real fundamental pieces of data that help you understand and better maintain those relationships. That creates greater opportunities for growth and greater opportunities for retention.
I couldn't agree more, and it's so nice to hear someone on your side talk about that, because it feels like so much of what we've seen in the space in this evolving. It now feels like there's a bit of a mesh. You brought about the importance of data, and I joked about the nice to have, not a gotta have. We've seen a major shift, right? Just in the last few years of individuals really finally, organizations understanding the importance of data and starting, it seems like, everything they do with that from the ground up. And I don't have to tell you that wasn't the case 5-10 years ago always. So that's fantastic. Now I realize that at the interest of time, we're kind of, we've taken up a lot of your time, both of you, and appreciate that. So what I'd like to do, if it's okay, is float it over to Adam for some of your final thoughts, and Rick, I'll give you the same opportunity, and then we'll wrap it up. But appreciate it. Adam, floor is yours.
Thanks, Kent. I think the sort of final thought I'd want to leave people with is M&A is hard, and it is risky in the best of circumstances. And I think there's lots of different ways, if you don't execute well, that M&A activity can be a death blow for financial institutions, especially as it relates to customers, as we've spoken to. Damaged reputations, failure to deliver on the intended purpose of the acquisition or shareholder value. So, at Segmint, we think data is the key to success in just about everything there is in banking, including M&A. And I really would implore financial institutions to think about how to leverage the first party data that they're already sitting on, that gold mine that I talked about before, effectively to drive better outcomes and ensure that everybody, even the customer, wins in M&A.
Excellent. Rick?
Absolutely. One of the comments that I had with a COO of a client, unfortunately I know well, because this will not come across as being a constructive comment. But in the midst of an M&A announcement they were going for, I posed the question, so your two institutions are in the same market, and then you're merging with them. Why didn't they choose you when they had a chance to the first time? And I think that's a question that people really need to be honest and ask. And that's where the data can really be helpful. I think that can really tell you a lot about those customers that felt more comfortable at the place across the street, even figuratively, than they did coming in to bank with you 10 years ago. And that's not to be disparaging. The answer is really what's important. And understanding that, what drives and what motivates the behaviors of those customers, and how do you better understand that throughout the process of the transaction, so you're not trying to figure it out after the fact.
I love it. And I know we've reached, I'm being told we've reached the end of our allotted time for today. So, Adam and Rick, both of you, cannot thank you enough for A, taking the time to join, but B, just the ridiculously good insight in the M&A space and making this yet another very, very strong and exciting Data Jam session. So, on behalf of Adam Craig and Rick Hall, this is Kent Blacksher saying thanks again for joining us on this Data Jam. Look forward to our next one. And thanks again, everybody. Appreciate it.
Thank you.